All right. This is a critical update for every single person holding Bitcoin. Don't tune this out. What we're seeing on the charts right now is a pattern that has historically kicked off some of the most brutal moves in Bitcoin's past. The infamous death cross has now officially appeared, and it's happening as Bitcoin struggles below what was once its most important line of defense, the $88,000 zone. In this video, I'm going to break down exactly what this means now that this support has been broken. I'll show you why the charts are flashing a huge warning sign and what the data suggests could be a fast and painful slide down to the $78,000 range if we can't reclaim this critical level. We have a lot to get through, and this is time sensitive, so let's get straight to it. Okay, let's pull up the daily chart for Bitcoin because the picture it's painting is telling a story of extreme caution. For weeks, all eyes were on one area, the support fortress between $88,000 and $90,000. That wasn't just a random number, it was a critical pivot point for the market multiple times. It was a local bottom the bulls defended tooth and nail, but the bears' attacks just became too relentless, and now the price has crashed below that line in the sand, wiping out all of Bitcoin's gains for the year. The reason the alarm bells are ringing louder than ever is because of that ominous development that confirmed the breakdown, the death cross. For anyone new to this, a death cross happens when a shorter term moving average, like the 50-day, crosses below a longer term one, like the 200-day. Think of it this way: the 50-day is recent sentiment, and the 200-day is the long term established trend. When the short term momentum crashes so hard it dives beneath the long term trend, it signals a massive potential shift from a bull to a bear market. It's a sign that the bears aren't just here for a day or a week, they might be taking over the macro trend. And it's the timing of this death cross that screams red alert. It's not just that it happened, it's the fact that its arrival confirmed the break of the market's most critical psychological and technical support level. This creates a scenario of maximum danger. It's like a lit match has already been dropped in a pool of gasoline. If we can't get back above this level, the bearish signal from the death cross could be validated in the most aggressive way possible, triggering a new cascade of liquidations and stop losses. So, what happens now that $88,000 has failed? This is where we have to look at history and the market structure to understand the potential damage. A break like this is rarely a small thing. It signals that the last line of defense has been breached, and it opens the door for a rapid price drop to find the next floor. The first and most immediate target that every analyst is watching is the $78,000 to $80,000 range. This isn't a number pulled from thin air. This area is the next major historical support zone, a level where the market has found buyers and staged reversals in the past. A drop to this level would be another huge leg down, causing immense pain for anyone who bought in the 90s and above. But what if $78,000 doesn't hold? The chart suggests the pain could get a lot worse. The next logical target would be in the $74,000 to $76,000 range. What's especially worrying about this zone is that it lines up almost perfectly with the local lows we saw back in April of 2025. A return to those levels would mean all the gains from the second half of the year would be completely gone, confirming a much deeper and longer bear market than many are ready for. And in a worst case, full on panic scenario, we could even see a test of the 70,000 to 72,000 area. Many long term investors see this as a historical zone of major accumulation. A drop to this level would mean a massive deleveraging event across the whole crypto market, probably sending the fear and greed index to single digits and causing widespread panic. Now, looking at how the death cross has performed in the past gives us a reality check. While some analysts point out that it can sometimes mark a bottom, there are plenty of times it's been followed by major downside, like in January 2022, when a 50% drop followed over the next 6 months. Given the current economic headwinds, which we'll get into, ignoring the potential for a severe sustained downturn would be a huge mistake. This breakdown isn't just a story on the charts, it's being backed up by a deteriorating macroeconomic landscape and a shift in institutional behavior that's creating a perfect storm for risk assets like Bitcoin. Throughout November, the broader markets have been gripped by a risk off feeling. Concerns over stubborn inflation and what the Federal Reserve will do next have put huge pressure on assets like Bitcoin. The sunny story of steady rate cuts that powered the market earlier in the year has all but vanished, replaced by fears of a more aggressive Fed. This uncertainty is hitting the institutional money that was the engine of this bull run. After months of steady inflows into Bitcoin ETFs, the tide has turned. In November alone, we've seen a staggering net outflow of nearly $3 billion from global crypto ETFs. If this keeps up, it would be the largest monthly withdrawal on record. The iShares Bitcoin Trust, the biggest ETF out there, lost a massive amount of assets in the first part of the month. This shows the smart money is actively cutting its losses and selling into a weak market, which only adds more downward pressure. On-chain data is telling the same story. We're seeing a big increase in Bitcoin flowing onto exchanges, which is a classic sign that people are getting ready to sell. Open interest in the derivatives market, which is the total number of open futures contracts, has also been falling for weeks. This tells us that speculative traders are closing their bets on a price increase and don't believe a recovery is coming soon. This isn't just profit taking, it's a slow motion exit from the market. And there's another layer of hidden risk most retail traders don't even see. Rumors of highly leveraged digital asset treasury style companies being in trouble. These are firms that raise billions promising to hold crypto on their balance sheets. With prices falling, many are now underwater on their investments and could be forced to sell to cover their debts. This represents a huge lurking source of selling pressure that could hit the market at any moment. When you mix a bearish technical pattern like a death cross with a macro environment of institutional selling, weak ETF demand, and hidden leverage risks, the case for this dip getting deeper becomes overwhelmingly strong. Okay, with this grim picture painted, let's talk about the solution. This is not the time to panic sell or blindly follow the crowd. It's time for a clear-headed strategic battle plan. Understanding the key levels and signals is what will separate the victims of this market from those who navigate it smartly. First, let's talk about the bear case. The death cross was the warning, but the key is what happens now. What I'm watching for is a rejection from the $88,000 level. If Bitcoin tries to rally but gets smacked back down and then breaks the recent lows around $89,000, that's a confirmation. A move like that would signal that the old support has turned into a concrete ceiling and that sellers are in total control. If that happens, the slide down to the $78,000 to $80,000 zone becomes my base case scenario. Now, what about the bulls? How can they fight back and turn this into a massive bear trap? The path for a bullish reversal is clear, but it's a steep climb. The first step is to reclaim the $88,000 to $90,000 zone and hold it as support. We need to see buyers step in with conviction. But a bounce isn't enough. To kill the bearish momentum, Bitcoin needs to start taking back key resistance levels. The first major hurdle is the range between $92,000 and $96,000. Breaking back above $96,000 would be the first sign that the bulls are back in the game. However, the ultimate test, the level that would truly invalidate this entire bearish idea, is the psychological stronghold of $100,000. Reclaiming six figures would be a massive psychological win. It would trap all the short sellers who piled in, possibly triggering a short squeeze and flipping sentiment from fear back to greed almost overnight. So, the game plan is simple. If we see a rejection from $88,000, the path to $78,000 is open. If the bulls can get back above $96,000, the chance of a bear trap gets higher. And if they pull off the miracle of reclaiming $100,000, this red alert is canceled. Before we go any further, I want to give you something important. I put out a free newsletter where I break down the exact charts, macro shifts, and danger signals I'm watching in real time. The stuff that simply can't wait for the next video. If you want faster alerts, smarter analysis, and my real-time read on Bitcoin's key levels, the newsletter is the place to be. The link is at the very top of the description. It takes 5 seconds to join. And I'll tell you this now, I'm currently developing a brand new class that walks you step by step through navigating a crash down, a crash up, and everything in between, including entry-exit frameworks, risk management, macro cycles, and proven strategies to protect and grow your wealth when markets go insane. When the class launches, the only people who get early access, early pricing, and first notification will be the people on that newsletter list. So if you want to be one of the first to get into the new class the moment it goes live, join the newsletter right now. Link in the description. All right, back to the charts. Navigating these choppy waters requires timely info. The market is changing by the day, and the levels we've talked about are critical. If you want to stay updated with my latest analysis as this all unfolds, I highly recommend you subscribe to my free newsletter. It's where I share my immediate thoughts, key chart updates, and insights that don't always fit into a full video. The link is right at the top of the description below. It takes 2 seconds to sign up, and it's the best way to make sure you don't miss a critical update. Now, with all this talk of crashes and red alerts, I have to show you the other side of the coin. Because in markets, the moment of maximum fear is often the moment of maximum opportunity. Let's look at the crypto fear and greed index. As of this week, the index has plunged into extreme fear, with readings falling as low as 10 to 15. This shows that the market is gripped by panic and pessimism, with sentiment at a 9-month low. Historically, a contrarian investor sees this not as a time to sell, but as a potential signal to start paying attention. Looking back, periods of extreme fear have often lined up with major market bottoms. Think about times when sentiment was in the gutter. Those who had the guts to buy when everyone else was selling were usually rewarded handsomely in the months that followed. This doesn't mean you should rush in and buy right now. The trend is our enemy, and trying to catch a falling knife is a dangerous game. But it does mean we should be open to the idea that this sell off is a final flush out of weak hands before the next major leg up. And here's a fascinating twist. While the Death Cross has a terrifying name, its recent track record has been surprisingly bullish. Analysts have noted that the last 3 death crosses in this cycle all mark the lows of a correction, not the start of a new bear market. Each time, the cross happened after most of the selling was already done and was followed by a rally to new highs. So the key question is this time different? With the tough macro environment and clear institutional selling, it very well could be. But the contrarian case is built on the idea that the market is designed to inflict the most pain possible. And right now, the max pain trade would be a sharp reversal to the upside, leaving all the panicked sellers and new bears in the dust. If Bitcoin can find its footing here, this dip might be remembered as one of the last great buying opportunities of this cycle. So to wrap it all up, the Bitcoin market is standing on the edge of a knife. We have a confirmed death cross that has smashed through our key support, threatening to start a brutal move to the downside. The battle lines are drawn at what used to be support, the $88,000 to $90,000 zone. A firm rejection from this level puts the bearish targets of $78,000 and even $74,000 squarely in play. That is the primary risk and the reason for this alert. The bulls' only path to survival is to fight their way back above this zone and begin the long climb toward the psychological fortress of $100,000. Reclaiming that level would flip this whole script and turn fear into a massive bear trap. My personal game plan is cautious patience. I'm not opening large new positions here. I'm watching for either a confirmed rejection below $88,000 or for the bulls to invalidate the pattern by reclaiming resistance. The market is giving us clear signals. Our job is to listen, not to force our own opinions onto the chart. Trade the market you see, not the market you want. This situation is incredibly fluid and will likely see major moves in the coming days. For that reason, make sure you're subscribed to the channel with notifications on. You don't want to miss the next update. Also, let me know your thoughts in the comments. Are you in the bear camp, expecting a drop into the 70s of thousands, or do you think this is a massive bear trap in the making? Before you go, don't forget to join my free weekly newsletter. It's where I share the fastest updates, the biggest warnings, and the smartest opportunities long before they hit YouTube. And if you want early access to the new class I'm building, covering everything from macro cycles to crash strategy to long-term positioning, the newsletter is the only place I'm announcing it first, so make sure you're signed up. Link in the description. Stay safe, stay informed, and I'll see you in the next video.